I want to welcome you all to the Small Business Resource Network's webinar series. For those of you that are not familiar with the Small Business Resource Network, we're a network of professional service providers who work with small business owners. Our members are accountants, business attorneys, commercial lenders, commercial insurance agents, business consultants, a variety of government and nonprofit organizations, and a few select corporations who all provide services to the small business community. My name is Nancy Boyle. I'm the director of the program. If you would like more information, please feel free to visit our website at www.sbrn.org. Our phone number and website are there on the call or on the slide. And before we get started, as Linda goes through her presentation, if you have any questions, please type them in the question box. We are recording this, so you will get a link to the recording afterwards. So if you miss something, because I know this is going to be heavily laden with a lot of good information. So if you miss anything, you'll be able to review the recording. Also, after the presentation, you'll receive a short evaluation. If you would please take a minute or two and complete that evaluation and send it back to us, we would really appreciate it. Okay, so let's begin. Our presenter today is Linda Ford. Linda is a CPA. She is the owner of the Ford firm. She has nearly a decade in public accounting, and she does everything from tax returns to compilations to bookkeeping, payrolls, et cetera, et cetera, et cetera, and the list goes on. She has a client base that runs the gamut of industries, so she has expertise in numerous industries. Linda is also an Air Force veteran, so we want to thank you for your service, Linda. She graduated from Wilmington University with a Bachelor of Science degree in Accounting and Business Management, so double degrees, both summa cum laude. She has an active Florida CPA license and has been licensed, although is not active, in Tennessee, Texas, and Alabama. She's a QuickBooks Pro advisor. She's certified in desktop, enterprise solution, and point of sale. And she's a constant learner. So you have a wealth of information here with Linda Ford. And so I am happy to turn the presentation over to Linda, and I'll be back when it's time for questions. Okay. Thanks, Linda.
Great. Thank you, Nancy. Welcome, everyone. We've got a lot of material to cover, and I will try not to go too fast, but I do want to try to get everything in as we go. As Nancy mentioned, we are a nonprofit-focused firm. We specialize in audits and 990s, and I am an Air Force veteran. But that's not to say we don't work with small businesses. We love our small business clients. We really enjoy that connection and helping everyone get their taxes done, get their bookkeeping straight, and learn how to make a profit. Definitely. So PPP forgiveness, what you need to know now. Oh my goodness, so much. So a little background we'll start with. The SBA, Small Business Administration, officially opened its PPP forgiveness process to lenders on August 10th of 2020. But many lenders are not yet accepting applications. Of the 5.2 million loans, only 56,000 forgiveness applications have been received by the SBA as of last week. So about 1% has been received by the SBA. And we'll talk about what that process looks like in just a moment. But as you can imagine, if there's still 5.1 million loan forgiveness applications out there, it's going to take a significant amount of time for banks and the SBA to be able to process this forgiveness. The Governmental Accounting Office paperwork reduction notice estimate on the form itself is 180 minutes on the EZ form. However, the GAO has actually reported that they have, it could take up to 15 hours to complete the form. Review for lenders could take 50 to 75 hours for each application. So think about these banks and what they're having to do, and they spend a week and a half on every single application. You can imagine what this is going to cause for the banks once they open the application process. Small businesses have until 10 months, and that includes nonprofits, have until 10 months after their covered period expires before they have to begin making payments or to submit a loan forgiveness application to the SBA through your lender. So if you were funded in May and you chose the 24-week period, after the end of that 24-week period, you have 10 months to get that application in before you have to start making payments. And having the application in stops making payments. And we'll talk a little bit about the implications of that as a kind of as a teaser here in a moment. Interest starts to accrue from day one of the funding. So the bank will be paid the interest by the SBA for the forgiven amount. But understand that from a banking perspective, and I don't think this is their focus, I really don't, that would be very cynical, but from a banking perspective, they're going to earn more interest the longer they wait to begin accepting applications, and they're going to earn more interest the longer they take to process those applications. However, I think the bank's true issues, their true struggles, and their reasons for waiting are far less nefarious. I think it's just overwhelming. Banks are not required to start accepting applications by a specific date. So there is no requirement on your bank. If they haven't opened up their acceptance portal, there's no requirement for them to start accepting by any specific date. When an application is accepted by the bank has 60 days to submit a forgiveness determination to the SBA. And then the SBA then has 90 days to remit the forgiveness amount back to the lender with any interest accrued. So now we're talking another 5 months. So you've got 10 months from the end of your covered period to apply for forgiveness. And then there's up to another 5 months before you know if it's been forgiven or not. Talk a little bit about audits. I only have a couple of slides on this simply because most of the people in this group aren't going to fall into this category, but you should still be aware of it. So all loans in excess of $2 million, the SBA has said they're going to audit. The SBA reserves the right to audit any loan for any amount at any time. So if you received $6,000 and someone at the SBA feels that there may be an issue with your loan, you still could be audited. You must retain your paperwork and support until the loan is forgiven or repaid in full. Further, I'm recommending that for tax purposes, you keep the information as long as the statute of limitations is open for your type of return. And that differs based off of the type of return you're filing, but I would keep all of that paperwork together. And as we'll talk about taxes in a little bit, you may want to really have that support together in a file, very organized, and put a rubber band around it, or just keep it in that one folder so that you've got it for later. What will the SBA consider when they audit someone? They're going to consider if you were eligible for the loan. Unfortunately, we've seen some cases of fraud come out in the news already. Someone purchased a sports car with their money. There have been many wildly profitable companies apply for the loan, and perhaps they didn't need the funding. They could have survived just fine without it, and they weren't being affected. So that's one of the questions the SBA is going to ask is, were you eligible for that loan? Was the loan amount calculated correctly? Personally, I think they will have to have some leniency in that because the calculations initially weren't clear to everybody. The process changed in the middle of the application process. Banks didn't even have all of the rules. So I think calculating the original loan amount correctly, unless they see something indicating fraud, probably won't be where the focus of the audit is. But they still reserve the right to review that amount as well. Were the funds used appropriately? They will ask for support, especially on those above $2 million loans, but on any loan that they audit, they're going to want to see your support and documentation. And then is the forgiveness calculated correctly? And this is kind of a challenge because you're calculating the forgiveness and it's very complex. You're calculating the forgiveness, you send it to the bank rechecks it, and then it goes to the SBA. We would hope it's calculated correctly, but the rules are complex. So I would not be a person looking forward to having an audit by the SBA on a PPP loan. However, I would absolutely recommend that you don't go through this process alone. If you're selected for an audit, you need to reach out to your tax professional and or your attorney to work through it in a organized fashion. Oh, gee, there's my next slide. If you're audited, you have to respond with any additional information needed. Your bank should notify you that your account is being audited. And you have to respond with very specific documentation. So it's very important that you submit each and every item on that list if the time comes. And again, do not submit this without guidance from an attorney and or your CPA. The audits will be reviewed by an administrative law judge, and the determination will be binding. There's an appeal process, but again, you've really got to make sure you've got all of your documentation together, even before you apply for forgiveness, but especially if you're selected for an audit. So enough of the scary stuff. Let's talk about some sticky wickets. We know that there are a lot of sticky wickets around the PPP funding. As Nancy and I were talking before the presentation, Congress acted quickly to get funds out to people as quickly as they could. So between Congress and the SBA and Treasury, they did the best that they could in a crisis situation. But unfortunately, the rules continue to change even after funds could have been fully expended. Interim final rule was published August 24th of 2020. Many people had already spent their PPP funds by that time, so some of their items are no longer eligible. They may have had additional payroll costs. They may have had other items that they could include in the use of those funds. However, these are the areas that are going to be the challenge for you as you work through your forgiveness. Very specifically in that interim final rule, one of the things that's discussed is non-payroll costs. So for subtenants, if you lease your office and then you sublease a portion of it, that portion of the rent is not eligible for PPP forgiveness. So you lease your office from the landlord, you lease out 2 offices to an attorney down the street because you're friends and you don't need the space and it helps offset your expenses. The portion of the rent that attorney's paying to you is not eligible for forgiveness now because you're already getting those funds from somewhere else. Owner rentals is another sticky wicket. I like saying sticky wicket, it's kind of fun. And since I don't get to hear you laugh because we're doing this virtually, I'll get to say it as much as I want. If you own your own building and you have a mortgage on it, the mortgage interest is eligible for forgiveness. However, based on this interim final rule, any portion related to a leased out space is not eligible. So now instead of you lease your building and have a sublease, you own your building and lease a portion of it out to that attorney down the street. In this same case, that interest payment is not eligible. And I would probably do it based off of square footage to determine what your portion of ineligible interest expense is. Home office. Include only the share of covered expenses that were deductible on your tax return. And gosh, I'm going to be hard on this one myself because many people try to deduct that home office expense and don't have the documentation that they really need for it. There is a safe harbor on your tax return, or you can calculate it off of the square footage of that space that's exclusively used for business. And the IRS does mean exclusively. So I would make sure to really document this information if you're a small business owner and you're going to use some of that home office in your PPP forgiveness. If you have other expenses you can use rather than that home office, use those other expenses. Don't put the home office in your information. Very critical though, only the share of covered expenses that were deductible on your tax return. Rent payments to related parties are only eligible for forgiveness to the amount of mortgage interest. So you own the building as a master S Corp, and then you rent the building to an LLC underneath it, but you have ownership interest in both. That's what they're talking about here. And for that, only eligible for forgiveness to the amount of mortgage interest. And here is one of the biggest problems that we have right now. I posted just this morning, Congress is making another attempt at an additional PPP funding, an additional stimulus. And again, we hope that this is resolved in the portion of it. But we just don't know yet. PPP funds are not taxable income. However, IRS Notice 2020-32 states that no tax deduction is allowed for an expense that is otherwise deductible if the payment of the expense results in forgiveness of a PPP covered loan. So those expenses that you use the PPP funds for are no longer deductible on your tax return for 2020. So you paid salaries and wages, and normally those salaries and wages are tax deductible as part of the calculation of your tax return. If you have PPP funds and they are forgiven, they're not includable as deductible expenses in 2020. So let's go through an example here. I think this is really helpful to understand exactly the implications of this. If you were funded on May 4th, and the end of your covered period, if we use the 24-week period, would be October 16th. 10 months from October 16th, so remember we have 10 months to apply for forgiveness after the end of our period. 10 months from October 16th is August of 2021. Well, your tax returns due either in March or April, so you have to request an extension. And then that extended return is due in September or October, depending on your entity type. And there are differences for 990s for nonprofits in the timing of it, but they will have the same issue. So August of 2021 is 10 months. That's when you submit your application. You may submit it before then. Now the bank has 60 days. Oops, that puts you past the deadline already. And the SBA has 90 days. So you have to decide what you're going to do, and now is the time to be thinking about these things. If you don't request and receive forgiveness by your due date of your tax return, you need to request an extension because you can't determine your taxes until you know which expenses are eligible. I'm going to say that again. You can't determine your 2020 taxes until you know which expenses are eligible. Now, you can take an approach to assume that all of them will be forgiven, and so they are excluded from your tax return, or you can take the approach that none of them will be forgiven and include them in your tax return, and then you may have to amend your tax return. I would say if you're not 100% sure of your support and whether it'll be forgiven or not, that you need to extend. So if you were funded later, because of course the PPP funding process didn't close until early August, if you were funded later, you may even run into issues with the extended deadline beyond what I'm talking about here. You need to talk to your tax preparer now and discuss your intentions. Whether that's me or someone else is irrelevant here. You need to talk to your tax preparer now and discuss your intentions. Make sure they know you have a PPP loan. Most preparers don't have the 2020 tax software yet. However, I am positive that they would be happy to extend your return as soon as the software is available. We at the Ford firm are keeping a list of clients as we hear from people that decide that they'd like to just go ahead and extend and wait. And then as soon as the software arrives, we can make those extensions. Now, you do still have to make payments with extensions, right? You need to pay in your tax due. That's another sticky wicket. It's another issue to determine how much you should pay in with your tax return. So again, reach out to your CPAs as soon as you can, your tax preparers as soon as you can, to discuss these issues for your specific situation and how you would like to handle them. You need to give your CPA, your tax preparer, exactly the same information you submit for the forgiveness of your tax return. They need to know exactly what you're claiming as these expenses. So it makes sense to make a copy of the documentation or scan it in. We like to work virtually or without having paper. So scan it in and send it to them. Most CPAs have a secure software that they can use so you can send that information in a secure fashion. So don't hesitate to ask them, but don't wait to communicate. Very, very important. And as I mentioned, we're waiting on Congress. Hundreds of organizations, literally, have been petitioning Congress for a blanket forgiveness. That amount has been discussed pretty consistently at $150,000 and below. And that's because most of the loans, of that 5.2 million loans we discussed, most of those loans are in that $150,000 and below category. It is possible that this will never be granted. And as we get closer to the federal election, it is highly likely that it would not be granted before the election is decided. So I would say start communicating with your tax preparer, start making plans internally, understand the implications of it. But unfortunately, you probably won't know if there's blanket forgiveness or not until mid to late November, until things can get resolved. Many organizations, including the banks, do not have the person power to devote to this process, so they are also left waiting to see what will happen. So be patient with your bankers. I assure you they want to get these loans forgiven and get that interest paid to them as quickly as they can, because they haven't been paid the interest for these loans either yet, and they won't until forgiveness applications are processed. Early applications for forgiveness are allowed. However, an 8 or 24-week covered period still applies. And these next two bullets apply regardless of whether you're doing an early application or whether you're doing an after the fact application. If you were funded before June 5th, you choose your period, 8 weeks or 24 weeks. If you were funded after June 5th, then you're automatically in the 24-week period. So June 5th plus 24 weeks equals about November 20th, plus 10 months equals September 21st, 2021, after the extended tax deadline for many. So just understand that you can go ahead and apply if your bank is open, but there are some caveats. It's going to lower your compensation maximum if you're using an early period. And we'll walk through an example of how that works. So 16 weeks, in 16 weeks, funds are expended. So you used all your money in 16 weeks, you're ready to apply, your bank has the application process open, you're going for it. You would prorate your compensation that's allowable using the following math. You would divide your 16 weeks by 24 weeks, the maximum amount of your period, and then you'd multiply it by the maximum compensation allowed for any individual, and your new maximum compensation becomes $30,769 per employee. So again, you can apply for it if you've used the funds and you're worried about your FTE count, for example. However, understand that your maximum amount per employee changes. Wage reductions still apply for the full period. So if you reduced wages, that still applies for the full period. it is a disadvantage to make an early application for forgiveness unless you're very concerned about your FTE count. Okay, meat and potatoes. My goodness. Owner employees, even for C Corps, and initially this wasn't the case for C Corps. This was something that changed in the process of guidance coming out. Owner employees are limited to $20,833 for the 24-week covered period. This does not apply to less than 5% owners of C Corps. So if you have someone that's less than a 5% owner of the C Corp, they still get the same maximum as other employees. Document everything you can, including your conclusions and how you reach them. And here's an example for you. You're a restaurant in Florida. You were not able to operate at full capacity during the coverage period. Print and keep that executive order that said that you were not able to operate at full capacity during the period. While they're available online, who knows how long they'll stay available, and you may need that support down the road. Keep in mind that your bank may be located, the main branch that's processing the forgiveness application may be located in another state. So they don't know the restrictions that were in place in Florida or Georgia or wherever you're at, because the main branch of that bank is in another state. Keep copies of everything together. Your payroll reports, your taxes paid, your insurance payments, your 401k contributions. If you used it, keep it as a package. Okay, so the SBA issued some FAQs, and I've only selected a few of them here, but I've put the link in the materials, and I believe that the materials will be available later. I know this is being recorded so that you can go back to it and find this slide. These FAQs are excellent, but again, I've only selected a few of them here for time purposes. So general FAQ 3, and these are put into my own words to make them fit on slides and make them more digestible. So if you read the actual FAQ and it's slightly different, it's just because I've taken my interpretation of it. The question is, do I have to make a payment prior to forgiveness? And the answer is no, as long as you've submitted your applications within 10 months of completion of the covered period. So that's what we were talking about earlier, that as long as you get that application submitted, you won't have to make a payment, even if you're beyond the 10-month window. Loan forgiveness payroll costs. FAQ 1, the question is, are payroll costs incurred during the covered period eligible for loan forgiveness is if they are paid after the end of the covered period? So this is an accrual question. This is, my employees worked from August 24th to August 30th. My pay period, my covered period ends August 30th, but I don't pay my payroll until in September. Yes, if they're paid on or before the next regular payroll date. So you still have to pay them with the next regular payroll date. Don't hold them, don't delay in paying them, but if they're paid by the next payroll date, those are includable. FAQ 2 for loan forgiveness payroll costs. The question is, are payroll costs incurred before the covered period eligible for loan forgiveness if they're paid during the covered period? So this is the same thing on the other end of the spectrum, right? This is the same thing at the beginning of your covered period. You had employees work from March 28th to March 31st, but you didn't pay them until April, and your covered period started April 1st. Yes, that's includable also. So you get both ends of the deal on those payroll costs. That's really nice. It's very helpful, actually. Make sure you calculate all those payroll costs, because the more that you use in payroll with the PPP funds, the easier the forgiveness process is going to be for you. Loan forgiveness payroll costs, FAQ 4, is cash compensation equal to gross payroll or net payroll? And this is so important. It's equal to gross payroll. And there was a lot of confusion about this initially. The loans were calculated off gross payroll initially, but as they come out and talked about the expenses that were eligible for PPP forgiveness, the federal taxes, the employee portion of health insurance, and other items were clearly missing from those forgiveness, from that forgiveness guidance. So this is key. Cash compensation is gross payroll. So when you're filling out that application, this is very, very important. FAQ 5, are only salaries included, or can tips be included too? And hey, this is great. This is very, very helpful. Tips, commissions, bonuses, and hazard pay are included. So if you have that restaurant again, or your favorite coffee shop, and your employees normally make tips and you supplemented their wages to ensure that they had what they normally make in a week, those tips are included in your PPP forgiveness. FAQ 6, what expenses for group healthcare benefits are eligible for forgiveness? It's the employer paid portion. So if you pay for healthcare for your employees and you pay for perhaps single coverage, that single coverage portion, that's what's eligible for forgiveness. The portion that's deducted from their wages is not eligible for forgiveness. Remember, we're going back to that cash compensation being gross payroll though, so it will get caught up in there. It will be okay in the process. And what about 401k? Same thing, the employer portion only, whatever match you're making to those retirement plans, that portion is what you're going to include when you're working on the forgiveness. Okay, I've got 3 calculators here I want to show you, and then we're going to get into some math for the last bit of the presentation. I picked Paychex and ADP because they're both major payroll providers and a lot of clients use them. There are many, many calculators out there, and there are many, many providers out there. So I'm not advocating for either one of them. I thought it was good to have both here for you though. So our Paycheck Protection Program Loan Forgiveness Estimator gives you some information about how it works, what your covered period would be, and in no event will a covered period extend beyond December 31st. I think we all understand those parts from the material so far. This estimator is very, very simplified compared to what we're going to talk about in a minute. But it's a good way for you to get a feel so that you can have those discussions with your tax preparer, internally with your accounting and finance teams, whomever that may be. Maybe it's the CEO and you need to go talk to the CEO after this about, gosh, our taxes might be a problem for this year. This is a good way to get that rough number, that quick rough number. You'll enter your loan amount, your payroll costs, and see they have nice little informational buttons here that talk about what each of the items are. Your mortgage, interest, rent, and utilities, and remember we talked about the caveats to rent. If you decreased wages, and we'll talk about this in detail, I promise, shortly. If you decreased your wages for your employees by greater than 25%, you'll plug that in. Your average FTEs, and again, they give you some nice explanation about that. I've got details for you on what this means shortly. Your comparison period average FTEs. And then it's going to calculate for you. You're going to put in any EIDL advance amount under the CARES Act, and it's going to estimate the amount of loan that will be forgiven and the amount of loan that may need to be paid back. They do give you the caveats down here that it's for informational and educational value. It's an estimate. It's only based on the current guidance, which may change. And this was revised as of August 10th, 2020. So that's the Paychex version. And the ADP version is similar, looks very, very similar to use. We have a link to the ADP version on our website if you'd like to take it for a test drive. And they do have a PPP guide available as well. And it's very similar, right? You enter the amount you received, you've got your little informational button to get information on it, your payroll costs, and they give you a little bit more details of that, your eligible mortgage interest, rent, and utilities, the decrease of wages, your FTEs, and then it's going to calculate for you. And of course, they do the same thing with the caveats. There are a lot of other things that you can do. If you've reduced your FTE levels during the covered period, you can consider rehiring employees by December 31st. That may help you maximize your loan forgiveness. It's a legitimate strategy if you have the business available to do that. But it's really important to understand you can restore your FTE level by December 31st. So great information here on both of these. My favorite in terms of, I guess, detail is through SBA.com. And I'm going to give you the same caveat they give on their website. SBA.com is not the same as SBA.gov. This is not the same as the SBA that came out with the PPP. They've got this nice red banner here. They tell you that, but gosh, this is a good tool. So here is the blank version of it, which I'll switch to in a second in Excel. You can even download a completed sample of it. And I think that will be very helpful for people to have that sample of it. So I want to show you this this version from SBA.com. This is what it looks like when you download it. It is an Excel workbook. You can get the actual loan forgiveness application by clicking the link. That takes you to SBA.gov, again, the actual Small Business Administration, so that you can get that information. This is the Schedule A worksheet, and we're going to talk through this here in just a minute. It's really complex, so you see the difference in level of complexity for a payroll provider who's just trying to give you a quick estimate of what's forgivable versus actually completing the forms. The links are clickable, so it will take you to Table 1, Table 2, your FTE calculator, all of the information that you need to complete Schedule A. So it's very, very complex, but this is the best calculator that I've seen by far so far. It really helps you understand the application process. The AICPA has also put out a calculator, so if you work with a CPA, they will have access to a very nice calculator to help you as well. All right. Okay, so forgiveness basics and definitions. For owner compensation, 8 weeks of 2019 net profit, not to exceed $15,385. So gosh, that's changed since the original guidance, right? That's really changed. So if you had a loss in 2019, how much owner compensation is forgivable? Goose egg, 0. 24-week period, 2.5 months of 2019 net profit, not to exceed $20,833. The SBA and Treasury's reason for this guidance is that this was never intended to be a landfall for business owners. It was intended to help stabilize the economy and keep people paid and employed. Now, take politics completely out of it. It's irrelevant to this conversation. I understand that for many of you, that's going to make the forgiveness process difficult because you take a regular salary out of your business or you run the profit first model, so you pay yourself and now that pay is limited in forgiveness. So again, better to work through the process early, understand where you're at and make plans than to wait till the last minute to complete this information, even though it's kind of tedious. It's even for a CPA. I promise you, this is not fun stuff. And again, this applies only to gross wages. So for the owners, not the benefits, only the gross wages, and it's for more than 5% owners of C Corps. For employee compensation for the 8-week period, the maximum is up to $15,385. For a 24-week period, it's up to $46,154, but it includes covered benefits, okay? Forgiveness is available if you did not reduce your number of employees or average paid hours from 1/1/20 to the end of the covered period. Forgiveness is available if you are unable to restore business activity to pre-February 15th levels. Again, go print that executive order. Go make sure you have the information that a grant wasn't refunded because of COVID because it wasn't safe. Print that information out and keep it with your documentation. And forgiveness is available if you restored your employee headcount to the same headcount that you had in the pay period that includes February 15th, 2020 by December 31st, 2020. So if you had 10 FTEs, full-time equivalent employees, if you had 10 FTEs in the pay period that includes February 15th, you need to have 10 FTEs by December 31st, 2020 for your forgiveness. Or the amount will be reduced. All is not lost. You won't have to pay the full amount back, but it will be reduced. All right, now there's some exemptions here, and this is the stuff that gets so complicated. Employees don't count against your FTE if they refuse to come to work, they were terminated for cause, they voluntarily resigned, or they voluntarily reduced their hours. I have this in all caps for a reason. I will yell it from the rooftops. Keep the paperwork. Make them put it in writing. If they resigned, make them put it in writing. Keep it. If you offered them a job back and they refused it, put it in writing. Now, there are also some requirements. The states have said you have 30 days after someone refuses to come to work to notify the state that they've refused. Good luck trying to get that information in on the Florida system. However, it's very important because if they've refused to come to work, they are not eligible for unemployment. And that's what the state's trying to prevent is unemployment fraud. Keep your documentation if someone said that they couldn't come to work, even if they couldn't come to work because they were scared. Everybody was scared. We were all concerned in March and April, right? But the PPP was designed to keep people employed. So if they refused to come to work, or if they did something inappropriate, keep that paperwork. Can't stress that enough. All right, here are some of the documents that are needed to be able to work on your forgiveness application. You need your PPP loan amount and disbursement date, your payroll history for the covered period, your 8 or your 24 weeks. You need your payroll history for first quarter of 2020, because remember that pay period that includes February 15th? Yeah, we've got to make some comparisons to that first quarter of 2020. Your average FTE for each employee during both the reference period, that first quarter, and the PPP periods, and the total amounts paid for health insurance, retirement plans, state and local taxes. Seems easy, right? Well, that's a lot of documents. Total amount paid to owner employees, you know, those 5% or more of C Corp owners, and then anyone that's an owner of an S Corp, a sole proprietorship, an LLC. Total amount paid for business mortgage interest payments, rent or lease payments, and utility payments. Okay, application type. I've gotten a lot of questions on this from folks over the past couple of months. And unfortunately, the easy form is really, really limited in its use. So if you're self-employed or an independent contractor, easy form. If you're a sole proprietor with no employees, easy form. Now, you probably didn't get funded if you were a sole proprietor with no employees because the rules kept changing as the process went on. You may have, but very few actually did because the banks weren't getting the information quickly enough to help people with those funding situations. Easy if you didn't reduce salary or wages for any employee by more than 25% for the covered period. And if you're using this qualification for the easy application, then you also must meet one of the following. So here what I'm going to say to you is you have to calculate your salary and wages to make sure that you didn't exceed the 25%. So even though you're going to use the easy form, you may have to complete the first part of the worksheet to make sure that you didn't exceed the 25%. So here are the two additional requirements. You didn't reduce the number of employees or average hours paid, or you were unable to maintain the same level of business prior to February 15th during the covered period. So that goes back to the executive orders. Were you allowed to be open? Were you required to be at a lower occupancy? Were you required to be closed for some reason, if you're a bar perhaps? That information is going to be critical for whether you can complete the easy application or not. If you're on the line, you're not sure if one of these two things you think applies, but you're not sure, I'd gather all that information for the full one, because if you submit the easy and your bank comes back and asks you for the long form, you don't want to be caught short. Okay, so for the easy application, you're going to need your number of employees, and on that form, you're going to enter the number of employees at the time of application for the loan. So if you applied on April 3rd, that's the number of employees. Your employees at time of forgiveness line, that's the number as you apply for loan forgiveness, not the number at the end of your covered period necessarily, at the time you apply for loan forgiveness. So you can see why waiting too long could be a detriment. We all want to wait and have the answer about the 150,000. However, waiting could be to a detriment if you don't think you can maintain your current employee staffing levels. Any EIDL advance amount if you got one. And then we get into the math part. So payroll cost line 1 is going to be total cash compensation. Remember, we talked about cash compensation. It is gross payroll. Total cash compensation plus employee benefits, the employer paid portion of it, plus owner compensation. So you see how the SBA went back and captured that gross payroll that we started with and pulled everything back into it. This is how they did that. So total cash compensation plus the employer paid portion of employee benefits plus your owner compensation. Line 2 is your business mortgage interest payments. Does not include principal, only interest. Business rent or lease payments for rent and leases. And remember our caveats before on what is acceptable for those. Utilities, gas, electric, water, telephone, internet. Those are all considered utilities. They are spelled out in the guidance. Then you do the math and you sign it. So the caveat here I've already mentioned. You almost have to do the Schedule A math to ensure that you're eligible to use the easy application. If you didn't change anybody's salary, you didn't change the number of people you have working for you, you didn't make any changes to what's happening in your organization as far as your employees go, you don't need to do the math. You've got it, go ahead and apply for it. But if you did make any changes, you need to do that Schedule A type math. Okay, that was the easy form. Super easy, right? The forgiveness application form is 4 parts. There's the Schedule A worksheet, the Schedule A, the loan forgiveness calculation form, and the borrower certification. And there is a borrower certification on the easy form as well. Same questions, very similar to the questions you certified when you applied for the loan to begin with. You say that you took it out in good faith, you behaved, you used it for appropriate things, and you sign on the line that says penalties of perjury, could go to jail, blah, blah, blah. I don't mean to make it something that we're taking lightly, but I think 99.99% of the people that use the PPP funds intended to use them for good. So don't let that borrower certification scare you unless you didn't use them as they were appropriately used, and then you need to consult an attorney. Okay, start with the Schedule A worksheet. Don't start with the form itself. You've got to work from the worksheet forward to get the math to complete your application. So table 1, I really like this SBA.com calculator. It will really, really help you. And we'll pull that up so I can flip back and forth. Again, you can just click on it. It'll take you to table 1, and it's going to tell you what the requirements are. And then literally you have to list each employee. So if you're a small employer, and the definition of a small employer is 500 or fewer employees. So you see, for a larger entity, this could be quite time consuming, entering all of the employees. The employee ID is going to be the last 4 of their social, their cash compensation, their average FTE, and then any salary and wage reduction. And it gives you the specifics of how to calculate each of these. So this is a great way to keep track of this as you work through it and document it, and a great way to have your support. And I apologize that my presentation slide versus my note slide keeps popping up there first. So table 1, you're going to enter US-based employees, employees who were employed during the covered period. So this is not people that you hire in December to make your FTE count. Table 1 is for people who were employed during that covered period and earned less than the annualized $100,000 for all pay periods in 2019, or were not employed by you in 2019. Last year, 2019. I know that sounds so confusing. So if they earned less than $100,000 last year, or they weren't employed by you last year, but they are employed during the covered period, they go in table 1. The cash compensation, again, is salaries, tips, commissions, paid leave, separation pay, bonuses. Now, average FTEs, there's 2 methods. I promised we would talk about this. The simplified method is put in 1 for someone who works 40 hours. Put in 0.5 if they work less than 40 hours. No guessing, no math. That is just 1 or 0.5. If you have part-time employees or hourly employees, this could work to your benefit or your detriment. So you really need to think about which method you're going to use. Again, I would go back to that calculator and I'd work it both ways to see which one benefits you the most. If you have too many employees, that may be difficult to do. You may need to hire a consultant to do it. But I would suggest working it both ways just to see which one works best for you. And the other method, literally that's what it's called. I'm sorry they weren't creative about it. You're going to divide the average hours worked per week by 40 and round to the nearest 10th. So in that 8-week period, they had 10 hours and 20 hours and 10 hours and 15 hours. You're going to add all those up, divide by 8 weeks. Those are the average hours. Divide that by 40 hours per week and round to the nearest 10th. Salary and wage reduction. The total dollar amount that you reduce the employee's salary over 25%. So this can be really, really complex, and we'll talk through it to some degree, but if you reduce employees' salaries, I would highly suggest working with a consultant to make sure that your calculations are correct. You don't want to have amounts of the loan that aren't forgiven because of a math error or a calculation error. Now here there are FTE reduction exceptions as well. You're going to enter the FTE of each reduced employee that meets any of the following. Enter the FTE of each reduced, repeating the same thing. If they were rejected an offer to rehire, remember we're going to keep that paperwork, right? They rejected an offer to restore their hours or pay. They were afraid, they couldn't come back, they just couldn't do it for whatever reason. You still get that FTE count. If they were fired due to a legal cause, and I know we've got some of our attorney friends out here, I don't believe that the SBA is going to come back unless they suspect fraud, unless they see that you've got 15 FTEs fired for legal cause out of 20. I don't think that they're going to come back to you in terms of the legality of the firing. So as long as you're not doing anything inappropriate, I don't think you'll have to document further than that you terminated them for cause, and what methods you took in that process for the SBA part of it, for the bank part of it. Now, from an attorney standpoint, my attorney friends will tell you that you need to have some serious documentation when you're firing people. So if you are, please consult one of our SBRN attorneys to make sure that you have what you need to protect your business. And then the other exception is that they voluntarily resigned. So or if they requested a reduction of hours. So they resigned or they requested a reduction of hours. If you replace the employee with another employee, don't put them in table 1. This isn't where they go. This is for vacant positions only. Table 2 is also US-based employees. They were employed during the covered period, but they earned more than that annualized $100,000 for any pay periods last year in 2019. If you can demonstrate, this is the FTE reduction safe harbor, and we've talked about this a couple times, but again, it's very, very important. If you can demonstrate that you were unable to operate between February 15th and the end of the covered period at the same level of business activity as before February 15th due to COVID-19, you'll indicate that on Schedule A. Print that executive order and keep it. I just can't stress that enough. All right, so you enter your total average FTEs between February 15th and April 26th. Same method as Table 1. Remember, we talked about the simple method and the other method. You'll enter your total FTEs during the pay period that included February 15th. Remember, we talked about you need those first quarter wages to be able to complete the form. If step 2 is greater than step 1, then you move on. If not, you'll have to complete line 13 of Schedule A. So let me pull that up for us a second here. So what we're talking about is you'll have to come down here and do some math when you get to Schedule A. And I'll keep working through in detail line by line with you, but I highly, highly suggest pulling down this calculator and reviewing it and taking a good look at it. Okay. Step 4, enter your total FTE as of 12/31/20 or the date of your application. So remember, you can restore your levels of FTEs by 12/31/20 and you'll be still forgiven. And then step 5, if step 4 is greater than or equal to step 2, you have met the safe harbor and you will enter 1 on line 13 of Schedule A. So this calculator actually brings it over for you if you meet that safe harbor. So if you do the Schedule A worksheet and you complete all the information and do the FTE calculator in the spreadsheet, it's going to pull over for you. So you don't have to try to keep track of what goes to which box. These are instructions written very much in the format of tax returns. So it's fill out this form, take it to that form, plug it in, and it can be a little confusing. Okay, if you use that calculator, lines 1 through 5 on Schedule A are going to automatically populate for you. That's what we were just talking about. On line 6, you're going to enter the employer paid portion of employee health insurance, owner employees, oh, I have a typo, excuse me, will not will go on line 9. Line 7, enter the employer paid portion of contributions to retirement plans. Line 8, enter the total paid for employer state and local taxes. So state unemployment, if you're in Georgia and the employer paid a portion of taxes, that would be applicable. Some states have additional employer paid taxes for local municipalities. Not employee paid portion. This isn't state withholding. This is employer paid portions. Enter the total you paid to owner employees on line 9. Line 10, you will calculate automatically if you use that SBA.com worksheet. Line 11, if you have no reduction in employees or average paid hours, or if you qualified in either of the safe harbors, check the box and enter 1 on line 13. So I'm going to flip back over there for you again. This box here is what you're going to check if you get that safe harbor. Okay. And then you're going to enter a 1. Okay. It's super easy. Only the formulas that are things that you can enter into based off of the instructions are unlocked. Everything else is locked and will pull over for you automatically. Line 11. Now, if you didn't qualify for one of those safe harbors and you couldn't check the box, you're going to enter your average FTE during your baseline period. And here we go with baseline periods. Baseline periods are either February 15th, 2019 to June 30th, 2019. So we're looking back to last year to see what our FTEs were. And this really helps you if you're seasonal to look at the same period of last year. Or January 1st of 2020 to February 29th of 2020. Those are the baseline periods that you can use to compare your FTEs. And you'll enter your total average FTEs. Again, that SBA.com form calculates it if you complete the Schedule A worksheet. Line 13 calculates, and then the application form is exactly the same as the EZ. However, if you use the worksheet, it'll all pull over for you. So it makes it super, super easy to get those numbers to the right boxes. I just can't stress enough how important it is to make sure your math is correct. I get nothing from SBA.com. I have no affiliation with them whatsoever. I just found that their form was the most complete. Okay, I left us a significant amount of time for questions intentionally because I've had a lot of questions from people over the past couple months, and I anticipate that we'll have a lot of questions here as well. So I booked us in some extra time for those questions. The application process is intimidating, but doable. Keep your documents and documentation. I know I sound like a broken record, but gosh, it's important. Proceed systematically. Make sure that you do this from the worksheet to Schedule A, to the forgiveness calculator, to the actual form. And don't be afraid to ask questions. Oh my goodness, this is complicated stuff. And your tax preparer, your advisor, your attorney, your banker would so much rather answer your questions than have a problem down the road. So we'll go to contact information. However, Miss Nancy, what questions do we have?
Well, we don't have any questions yet. I was kind of surprised. I thought we'd be getting a whole list of questions.
I thought we would too, because it's very dense material.
Yeah. So if anybody has any questions, please write them in the question box, and we'll ask Linda. I guess while we're waiting on that, Linda, have you started doing any of these calculations for your clients yet, or is everybody sort of in a waiting?
So I have a couple of clients who are trying to do this on their own. I know a couple of them are actually in attendance today. and they're trying to do these calculations and have them ready. However, most people have been waiting. The bank's not ready for it. The bank hasn't told them that they can apply for forgiveness. So I think rather than torturing themselves with this complex math, they've decided to wait. And of course, for-profit entities, for a regular business, it doesn't make as much difference on their financial statements as it does perhaps for a nonprofit entity who wants that loan converted to a grant. They'll show the grant on their financial statements and get rid of the debt on their financial statements. And for a nonprofit entity, that can be very, very critical when they're looking for future grants or for funding. So I think the nonprofits are more likely to try to get the forgiveness done more quickly than the for-profits.
Okay. All right. We've got a couple of questions here. The first one, it says, great presentation. Thank you.
Thank you.
Do you know if travel is covered under utilities?
There is a transportation line in utilities, but I don't know, there's not a definition that I have seen that gives me enough information to say that it is what is appropriate in it or not, because it's utilities. So I'm not really sure how transportation falls into it. I don't think that travel for business purposes would really fall into that category.
Do you think that under that transportation might be your delivery vehicles, things more along those lines versus I'm going to make a sales call in Chicago and those are my travel expenses?
Very likely, yes. And perhaps expenses that were reimbursed to employees that could be considered wage-like, but I would be very, very careful about selecting those transportation or travel items. If you can allocate other funds, again, I would probably use that as a last plug-in resort rather than using it as something you're relying upon.
Okay, how would if you give your salespeople a car allowance, you're giving them a flat $200 a month or whatever, is that a little bit of a gray area, or would that kind of fall in under that transportation stuff?
I think it would actually fall in under cash wages, because if you're giving them an allowance and there's not an accountable plan for that allowance, it would be included in their W-2. So
Okay.
if it's included in those box 1 W-2 wages, it would definitely be cash compensation.
Okay. Our next question, if an owner of an S Corp pays themselves through W-2, are they still subject to the limit?
Yes. Yeah, unfortunately, that was part of the guidance that came out after people were spending the funds and really shocked everyone. I absolutely understand what the intent is, that they didn't intend it to be a windfall for owners of small businesses. However, we all know that we are the last ones to get paid very often. So I don't think it's fair. Hopefully Congress will fix that portion of it. But yes, if those are owner wages. So even if you pay yourself through a W-2, it's included in the owner wages.
Okay, next question. You mentioned that expenses related to subleasing is not a covered expense. What if you are on the other end? You are the sublease. Are my rental expenses paid eligible for coverage?
Great question. Yes, they are. So I rent a portion of my building from somewhere else. My rent, yes, is part of those covered expenses. So, and that's why on the other side, on the landlord side, they're not, because we're paying them, we're offsetting the cost that they incur on their side. So yes, absolutely.
Okay. And now we have a question. Utilities include electricity, water, gas bills. Can we include the phone bill?
Yes, I believe telephone is included in the guidance. Let's go back to that, but I'm pretty sure that telephone was included. Goodness, I talked about that a while ago, huh?
Yeah.
Here we go.
There
Telephone.
we go.
Yes,
Electric,
telephone
gas,
and
water, telephone, and internet.
yes.
I think internet was a question that had come up early on, and and that, so that got addressed. I don't mean in your presentation. I mean early on in the whole PPP thing. So
Yes. Yes. And lease payments. That's been another one that's a little bit of a gray area. Business rent or lease payments.
okay.
Is it just for your building or is it for your copier lease?
Interesting. Okay. Another question, can we include the equipment rental?
Perfect. Thank you so much for asking.
Perfect timing.
From what I've seen and heard in all of the articles I have read, I would say that you probably can. I would again save those as the last things to put in and use as much payroll as you can and as much other items as you can in case they get excluded. But from what I have read in oh my goodness, more articles than I care to count, that's what my understanding is, yes.
Okay. All right, that seems to be the last question. We might, oh, wait, here we go. If the utilities are in the owner's name, can they be considered for an LLC filed as a sole proprietorship?
Oh, that's going to be really up to your bank as they're approving the application. So the SBA has put the determination of each forgiveness item in the authority of the banks. So again, this goes back to, I don't know how on earth they're going to do all of this in a timely manner. So it's really up to the bank whether they accept that or not. If those utilities are in your individual name, I would probably fall back to the caveat before that home office expenses and home expenses should be only to the extent they were deductible on their tax return. So if it's for a separate office space other than your home office, they should be, because they should have been deductible. But from an accounting perspective and from a legal perspective, again, I'm not an attorney. I do not play one on TV. You do not want your business expenses in your personal name. It causes a whole lot of potential problems, both on the IRS side as well as on the legal side.
Okay. Question here. What about storage unit rental? Does that qualify?
I would think that it would, based off of what I've read. Again, it's going to be up to your bank's interpretation, but I would think that it would.
Okay. Next question is, can we include the tenant improvement expense?
I guess I need a little bit more clarification on what you're asking. If you're asking that you repaired some plumbing or you built out a wall within your office, no, those are not eligible expenses. If you're asking for something else, please jump back in the chat box and give me some specifics, and I'll be happy to help answer that.
Okay. While we're waiting on that more information, the question is, if your forgiveness is pending on December 31st, would 100% of the loan still be a liability on the balance sheet at year end?
Mm-hmm. Well, there's two methods. That's a great question. The AICPA has said that there's two acceptable methods of accounting for these loans. You can account for the loan as a liability and leave it alone until it's completely forgiven. And that is perfectly acceptable, and that is the most simple method. If you don't account for it that way, you can account for portions of it being forgiven based off of your forgivable expenses being expended, and account for it that way at the end of the year. So you can absolutely say, we've expended 2/3 of our loan by X period, and we anticipate that that's been forgiven, or of course, you should have expended all of it by December 31st, so you want to say that it's forgiven. You can do that. However, if you're having audited financial statements, your auditor is going to ask you for all of this information that we just covered. They're going to ask you to prove to them that your expenses are forgivable. But the AICPA has said that both are acceptable. And one more caveat with that, I think I know who this is coming from, so that's not the case for this person, but I don't condone opinion shopping from CPAs. So if your CPA has told you something different, you can't go tell them, well, Linda said, because opinion shopping is not okay.
Okay, we've got a little more information on our tenant improvement expense. It says we
Great.
put in the fence for the building and we put on the wall for the building.
No, those aren't going to be expenses, forgivable expenses unless they are included in your rent. So if you somehow worked with the landlord and they paid for it, but then you paid it by rent, but if it's not included in your rent, no, those won't be eligible expenses.
But they would be considered business expenses that the business could deduct on their taxes. Is that right?
Correct, absolutely.
Okay, so, all right. She says they included in the rent invoice.
Well, then I would put it on that rent line. I absolutely would if they included it in the rent invoice. And then, if the bank comes back and says no, the worst case is that they're deductible on your tax return, but the bank doesn't forgive that portion of the loan. But if it's on the rent invoice, I would include it.
You and I talked about this before we even started this presentation, but I think it was interesting that, and if I don't ask this right, I'm hoping you can know what I'm talking about. But we talked about the getting the PPP money in, and then getting the forgiveness, and then not being allowed to use those expenses on your tax return. And the bottom line of that may or may not, and I don't know, this is really the question, is the bottom line of that you wind up paying more taxes?
It is. That was that great question. And thank you for reiterating that question for the whole audience. So the PPP funds themselves are not taxable, but by making the expenses not deductible, it has that same net effect. So all of the payroll you would normally deduct on your tax return that you used PPP funds for is no longer deductible. So you're going to have more taxable income in 2020 than what you had by the amount of your PPP funds. And that's what I was talking about early in the presentation when I said that you really need to talk to your CPA and figure out what your strategy is. Because if they're not forgiven and you don't include them on your tax return, well, then you've paid more tax than you needed to. And you're paying your loan back. So you really need to work with your CPA and come up with what your strategy for filing your tax return is. I really would recommend extending your return, your business return, which probably means extending individual returns for many of us. I would really recommend extending those returns and waiting for that forgiveness to come back before filing. We will still have to calculate what your potential tax due is, but it's just a little safer.
Okay, so we've got some more. We're back on the questioner about including the, the fence and the wall and all that. So she says, can we include the CAM, capital CAM, expense in rent? And then she goes on to say it is the common areas maintenance.
Yes, so CAM charges are not the same as rent. I am betting that most banks would exclude the CAM charges, but this is one where I'd reach out to your banker and talk to them. I really would. I would say, Banker X, I'm getting ready to fill out my application. I don't want to do something wrong here to cause either one of us more time or effort in the process. My CAM charges are included on my rent invoice. May I include them? And then that way you're getting the information straight from the person making the determination. But
Okay.
my experience is CAM is different than rent.
Okay. All right. And then our final comment from Jackie P. She says, this was one of the best and most comprehensive presentations on the topic of PPP loan forgiveness I've attended. Thanks, Linda and Nancy. Thank you, Jackie. We appreciate you being here. So if there are no further questions, I want to thank everybody for joining us today. If you would like more information, Linda, go ahead and put up that last slide so
Yes,
they
ma'am.
can get your contact information. So, you know, if you do have specific questions, feel free to email Linda. And then shortly after we close this out, you will be receiving an evaluation. If you would just take a minute and complete that, we would really appreciate it. Final comment. Thank you, Sue Miller. Great presentation. I agree with Jackie. So thank you everybody for being here and enjoy the rest of your day. Linda, thank you so much. This was an extremely valuable webinar and we really appreciate it. So
Thank you.
thank you everybody and have a great rest of your week.